Welcome to another edition of Coinomi Connect AMA. Join host Duane and the Changelly team as we dive into the big question, altcoin season or Bitcoin dominance? This conversation was recorded live on X Spaces on October 15th, 2025. Please note, the views and opinions expressed in this AMA do not necessarily represent those of Coinomi Wallet and should not be considered financial advice. Always do your own research on the projects discussed. If you enjoy the video, don't forget to like and subscribe to support the channel. Now, let's get started. Enjoy.
Hello and good day, everyone. We just started a bit early. Not that early, it's just a minute before the actual time. But of course, we wanted to give ourselves a few minutes or just a minute before we officially start to have some people join in while we're also waiting for the people from Changelly. So for now, let's wait for more people to come and join. And of course, our esteemed guests will be here if they're not already here. If you are, I'll get a notification and I'll ask you for an invite so you'll be allowed to speak again as well. Okay, for now, let's just wait for a couple more minutes. Okay, okay, I think we got someone from Changelly here. Wait a minute. Let me ask if I can ask an invite so you'll be able to speak. I'll invite a speaker. Okay, Changelly, excuse me, you're invited as a speaker. I'm not sure if you can see it. X actually has a knack for always kind of bugging out. Hopefully the invite is working. Okay, Changelly, hello, you're invited to speak. Wait a minute. Let me try inviting you once again. Maybe inviting as a co-host will... Okay, speaker will be the best way. It's weird. I know people are hearing me because in my other device, I am audible. So once again, if you're from the Changelly team, please accept the invite, or you can also ask me to request as a speaker, because I keep sending you invites, but for some reason, it's not showing up.
Yeah, can you hear me now?
Oh, finally! Yeah, I can hear you.
All right. Okay, I was on the mobile, but I transferred to the laptop. It didn't seem to work on the mobile. Can you hear me fine?
Yeah. I'm not sure. Okay, you're loud enough, I guess. Yeah, you're loud enough. Okay.
Okay.
Yeah, that's what I normally do, but it's in the opposite. You know, if my PC is not working, I switch on to mobile. But I guess it's the opposite for you. But I don't know. That's the weird
I started
thing
on the mobile.
about X.
I started on the mobile. That didn't seem to work. I could hear you. It was getting frustrating, so I set it up on the laptop. It's all working now.
Okay, yeah, I can hear you loud and clear, but I wanted to confirm with everyone because I'm using a loudspeaker. I'm not sure if you're speaking too quietly. So Barbs, Barbs and anyone else, can you confirm if the guy from our guest from Changelly is loud and clear, or it's not too strong?
Yeah, can you all hear me fine over there?
Just give a thumbs up or any emote. Okay,
Yep.
I guess you're loud and clear.
Okay.
Thank you so much, guys.
Sounds good.
Okay, I guess to start off, hello. Oh, wait, before that, do we have anyone else from Changelly team that we want to be here, or is it just going to be you as a one-man show?
Right now, yeah, for the call, it's me. I think we've got a few other from the team that will be joining in the audience. But yeah, for this space right now, it's going to be me.
Okay, should we wait for them to join in, or do you want to start? It's okay to start right now.
I think it's okay. Let me just send a quick message in the group and see if anyone else is coming in right now.
Okay.
I think we're good to start, and then we'll probably have a few people trickle in and out as we go forth.
Sorry, I was muted. I was speaking for a few seconds there. Okay, hello and good day to everyone that is currently tuning in here at Coinomi Connect, and this time with Changelly. And correct me if I'm wrong. Am I saying it correctly? Is it Changelly or Changelly? But
either way is fine. Yeah, Changelly is the way we pronounce it, but I guess depends where you're based and pronunciation. But yeah, Changelly is the way to say it.
Okay, Changelly is the easiest way to say it, I would say in my accent. But I forgot to introduce you first. But we got We got our guest for Changelly here. How are you doing today, sir? And can you please introduce yourself to us?
Sure. Well, Duane, thanks for having us and inviting us for this session. So my name is John. I work at Changelly. I'm in growth and partnership management, and I've been with the company now for about a half a year. I came previously from the fintech sector. I've been in crypto for about 6 years, so I've had a chance to kind of run into the second cycle now. And prior to that, I was more on the traditional finance side of things as a registered stockbroker trader in the UK, starting my career in the late 1990s. So I was actually trading through the dot-com period, which has some similarities with where we are today in the crypto cycle. And then I went on to do IPOs and government privatizations and that sort of thing. So all of that traditional finance led me into the crypto world, which is, I think, a step up, or the next generation of where traditional finance is going to be.
Okay. I'm quite curious. When did you start trading crypto again?
So I started in late 2019. So
Okay.
this is my second cycle, you could say. So I have one cycle worth of experience of making mistakes, and hopefully I won't repeat them in this cycle.
Yeah, so in trading in general, you've been trading since the 90s. So you're almost 3 decades into trading. And I
You
can't
could
imagine
say,
how.
started as a professional trader, sorry, in the late 90s. Crazy times. I mean, those were times when, we didn't have handheld devices or internet and all that kind of stuff. It was not really, I mean, we had internet, but there was still trading floors where you had to process your orders via fixed line directly into the exchanges around the world that we were trading on. So I had, these direct dials into Tokyo Stock Exchange, New York Stock Exchange, NASDAQ, London Stock Exchange, and so on and so forth. And they were hard dialed. You pick up the phone, you press the button that leads to the exchange. You've got a trader who's answering the call, and he's in the pit shouting out orders. So it was a completely different time. Nowadays, it's a lot easier, a lot more convenient, and fintech made it easier, internet made it easier. But now crypto is about to make that next level of just mass participation into something that would otherwise have been very difficult for general users and retail users to be in that space. So the world is changing. I've seen it change quite a bit in 30 years.
Exactly. I mean, you have that vision in that space for quite a while. And, I was imagining when I'm watching movies and how Hollywood portrays those kind of trading floors, people shouting, like, that sounds so chaotic. And now, as you mentioned, now we have handheld devices. You can trade literally anywhere, anytime, as long as you have an internet connection.
Yeah.
And as you mentioned, crypto definitely made it a lot more seamless and easy. But of course, crypto didn't also start as reputable. I
Sure.
believe people have been thinking crypto has been a lot of scams, and you started a bit late to the crypto, I would say, because crypto was booming at around 2012, but you started at 2019.
Yeah.
And
Yeah.
coming from stock trading to crypto, how did you get into that transition?
Yeah, so look, there's an interesting story behind that, because I've got a background. So I've got a mixed background. So my father's Armenian Lebanese, my mother's Finnish. I grew up in the UK, but in the later years, I got more involved with the family business we had here in the Middle East, which meant that I spent some time with. We had offices in Lebanon and Dubai, and Lebanon actually, I don't know if people are aware of it, went through a collapse of its currency. So with the collapse of the Lebanese lira, there was also a collapse of the Lebanese banking system. And what that meant was that every single bank account, for retail bank account, business bank accounts, were halted overnight, which meant that every single person living in this country with a bank account no longer had access to any kind of financial activity related to banking.
That's a disaster.
It was
That's
crazy.
a big disaster.
Overnight, our family business didn't have access to the liquidity. When I say liquidity, it wasn't liquidity we needed. I was trading in we had a company which was more involved with engineering and contracting. So let's say our cash flow was immediately halted. You cannot go to an ATM and withdraw money. You cannot make a bank transfer. You cannot withdraw cash. So you're basically at the whim of the banking system, and when the banking system collapses, everything collapses.
You're helpless in that situation.
Absolutely helpless. And that's, I would say that was what solidified my interest in crypto. It was the self-custody side of it, that kind of, ability to have an option to protect your wealth and not put it in the hands of a bank or a government. Ultimately, the banks collapsed because the government was corrupt and the central bank here was borrowing money off the banks, and finally defaulted on the payments to the banks, and then obviously the banks defaulted on everything they owed to their customers. So yeah, you kind of see that flow between governments, banks, and then individuals and businesses, and you realize there's got to be a better way to protect your wealth or your funds. And that's kind of how I got into crypto. I mean, how I actually got in, because a friend, always got a friend who says, why don't you get into this stuff? So in the beginning, when I heard all the terms of Bitcoin, Ethereum, and all those strange sounding names at the time, now I'm obviously used to them, I thought, what is this thing, but
Yeah.
I was very grateful he introduced me to it, because it came at the right time. And then, as I said, the Lebanese thing really solidified that.
I mean, that's a tragic way to get involved in crypto, in a way that, you needed to experience that kind of helplessness, knowing that, the amount of funds that you have is at the whim of the government. And,
Absolutely.
the thing about crypto, people might be saying, okay, US dollar is really stable right now. Our currency is currently stable right now. But I guess what happened in Lebanon is not an isolated case. Many countries right now is also suffering from that same kind. If there's a
Mhm.
country collapse, or unfortunately wars and stuff like that, currency can just drop off. I believe Venezuela also had that kind of situation when their
Sure.
currency really went down, and a lot of other things.
Yeah. There are
And
many third world countries that have experienced that over time. And in fact, if you go back far enough, many different civilizations over time have had collapses of their economies through their collapse of currency. So it's not something new. It is something that has occurred over time through different civilizations, and it's occurring now, as I said, in third world and developing nations. And you mentioned that the US dollar is stable.
that's what they say.
To a
Yes.
degree, that's debatable. I think that is really, as we get into this conversation in more detail, I think we'll see that there is a lot of things happening now, which, like the debasement trade. I don't know if that's something you've heard of, but we can touch on that later. But yeah, I think people are starting to realize that even the US dollar stability is not something that you can count on in the long term. In the short term, yes, you can use it as a currency to exchange goods and services, and that's very stable. But if you take it over just a 5 or 10 year period, you start to see that inflation is debasing that currency at a level that is accelerating. So to say it's stable on a day-to-day basis is accurate. To say it's stable on anything
Long term.
remotely near a longer term basis is not correct.
Exactly. That's what just people use. Oh, US dollar is the main currency that we use in the world, so might as well say it. But
Mhm.
again, the same problem that we have in your case, it's still under a government, a country, and the government can always collapse. There's
Yeah,
always that possibility, especially with the times that we have right now all over the world. And I guess that's where Bitcoin in general comes in. Bitcoin is
absolutely.
getting bigger and bigger at the time.
Mhm.
Although it's been a red market over the last week, I would say, but it's not as red as we'd expect.
Mm.
It's still the highest of all time for like years, and it's still above 100K dollars. I
Yeah.
would say that is really stable. And
Yeah.
I think a key point about this, it doesn't, again, it doesn't depend on a country's government, although it can affect it somehow, but it's not going to go down so big if, let's say, a country collapses.
Yeah,
And
absolutely. It operates outside of, not outside of entirely the control, but outside of the control, but not outside of the influence of countries. So
yeah,
countries and geopolitics and macroeconomics will definitely have an impact on the price of Bitcoin. It is a tradable asset. It is viewed as, a store of value, but like gold, different, geopolitical and macro factors will affect it. So it's definitely affected, but as it grows and as it's building, especially as it's building its overall market cap, it will become less volatile. Something that has a huge market cap is much more difficult to move. Volatility drops. when when it was smaller, it only took a few bucks to scare people off or make it move and have a volatile reaction to a small amount of money being drawn in or drawn out. But as you get bigger, you need really big flows of capital to have an effect on the price. So now the market cap is about $2.2 trillion. To make it move significantly, you do need a lot of money. And we saw what happened on Friday, when I think it was about $19+ billion of leveraged trades were wiped out of the crypto market. And granted, Bitcoin did have its biggest move, single day candle, in its history. I think it was close to 20K move. But still, compared to the kind of moves it would do in the last cycle and the times before, that was still quite moderate. And it showed that it could stand up to a flash crash 10 times larger than the crashes we experienced during COVID and during the FTX collapse. So I think that is really showing Bitcoin has some resilience and strength, way more than it did in the past.
And that is coming from a professional trader with over 3 decades of experience. You've seen a lot of crashes.
Oh yeah.
But Bitcoin has been really stable, I would say.
Yeah.
I was expecting it to crash a lot more, but when I saw it still staying above $100K, I was like, oh, okay. This is Bitcoin now. This is the foundations that we built over the past few years, and it's going amazingly.
Yeah.
But I can't really blame the people, and I guess there's in general knowledge for those who are not so aware about, the differences of Bitcoin and we would say meme coins or altcoins. Those are a bit different things. Sure, they're both crypto, but still different. And when they see rug pulls, scams, and stuff like that, it mainly applies to the altcoins.
Yeah.
And you coming from a trading standpoint, do you mainly trade the major coins like, let's say, Bitcoin, Ethereum, or do you also play around with unstable assets such as meme coins?
So I do have a mixed bag of the majors and then some altcoins, but it's a very weighted average. So you've got to understand the risk reward ratio of what you're getting into. And I don't go as far as to touch meme coins. So that's something I never traded in. I never got into.
You're one of the good guys, then. I'm kidding.
It's one of those things, we were talking earlier about the old days of trading and how difficult it was in those days for, let's say, a normal retail user to get into anything with leverage trading, and how today, with the advent of technology coupled with new technology in crypto, it's become very easy for people to get into trading and leverage trading and all those kind of things. For me, there's pros and cons to that. The pros are it's accessible to everyone. The cons are today someone without any experience in trading can get into something with extremely high leverage and get wiped out, which is what we saw on Friday, very easily. And coupled with that, you can go into extremely low cap type of assets like meme coins. And even on top of that, trade those meme coins with leverage. So to give you an example of how different it is, when I was trading as a futures broker, if you wanted to onboard a client, they had to be able to prove that their total net worth, they would not able to invest legally more than 10% of their total net worth, of their total assets, and they had to prove that they had a certain amount of assets in order even to open an account. So it was quite regulated, and it made sure that when they were doing high risk type of trading, leverage trading and futures and stuff like that, that they couldn't lose more than they could afford, as in they weren't going to go hungry the next day. Today, with what we see is, young people, and I totally understand where they're coming from. They're kind of not trading. I'd say they're betting. They're getting this 100-to-1 option to bet, and I think
it's all or nothing.
It's all or nothing.
The DGens.
I can totally understand where they come from, because today's the future for the young people today, looking at job opportunities and obviously debasement of currency and stuff like that, it's more difficult. It's definitely more difficult. So they're ready to take more risk, and in some ways it's good if they're able to manage risk, but in other ways, I think, like I said, for a lot of people who haven't had the chance to maybe study trading or understand risk reward and how to protect themselves, some people do take a little bit too much risk. So that's the plus side, is they have the option to do it. The downside is it can very easily be misused. And unfortunately, I think that means a lot of people will be exposed to losses that, maybe they could protect themselves against if they had a little bit more training or learning on it.
Yeah, I guess I'm one of those people who learned it the hard way.
Yeah.
I was younger. I was like, oh, my friend's hyping out this coin, buy into this. It's going to be X100 in a day. Yeah,
Yeah.
it did went X100 in a day. And then after a few hours, boom,
Yeah,
it's gone.
It's gone. I mean, look,
That's the kind of thing.
even as I would maybe count myself as an experienced trader because I've been in it for a long time. I was a licensed, derivatives trader with 100x type of options and things like that. I even took a hit on Friday with the flash crash, and it's you're always learning. You always So yeah, even experienced traders also take hits, and for me, Friday was one of those days where I lost a fair bit. I'm going to have to build that up slowly over time. But as I said, I understand the risk reward nature. So what I trade with versus what I hodl with, there's a big how to say, I hodl a lot more than I do trade. So overall, I'm able to recover. But a lot of people, unfortunately, on Friday, I think took hits where they won't be able to recover from some of the losses.
Yes, it goes around saying, managing risks,
Mhm.
because people can get really greedy, especially if you're not new. If you're new to this trading mindset where you get greedy. Oh, it's times 2, but what if it goes times 3? Maybe I'll hold it a bit longer. And the thing I've learned is taking profits from time to time.
Absolutely.
And learn how to take an L or a loss. You know
Yeah.
what? Okay, it's gone. You can't really help. It's that acceptance of losing something before you lose even more.
Yeah.
I think that kind of thing is what a lot of people should learn more about, especially about altcoins.
Sure. Yeah. I think with altcoins, there's a real opportunity. There's a real opportunity in the altcoin, and as I say, there's that altcoin cycle which we're looking at, and it does have a cycle, and I think it still has a place in this cycle to come. I think it's we've entered into a prolonged Bitcoin and crypto cycle. This particular one, I think it's going to last a bit longer. I still believe that people say that Bitcoin follows a 4-year cycle. To a degree, I think that's right, but really the 4-year cycle it's a liquidity cycle. Most people have probably heard of M2 money supply, where there's a contraction and then a release of money, US dollars, let's say, into the system, and we're kind of following that cycle. So I wouldn't say it's a crypto 4-year cycle. I would say it's an M2 money supply cycle, and all assets follow that cycle. And now they're talking about prolonging that cycle. So probably we might push crypto into 2026, whereas we should be theoretically coming to the end of the cycle. If we look at previous cycles, we should have ended the cycle really a few days ago in October. That would have marked the end of the 4-year cycle. So I think we're going into a prolonged cycle, this particular one. And with that,
Times are changing.
yeah,
Yes.
with that means that we have to wait a little bit longer for that rotation into altcoins and smaller caps. But I still think it's coming.
Yeah.
I still think it's coming.
Yeah. So I guess with that thought you mentioned, you don't believe that Bitcoin's value rising up affects altcoins also rising up, or do you have another opinion about that?
So yeah, I think that there is a kind of a playbook. First, Bitcoin, which is the market leader in the crypto space, has got to increase in value, which is what it's been doing. So this is the normal way that you would rotate from the Bitcoin into the major altcoins, and then you rotate into the lower, smaller cap altcoins. So I think we're following a normal kind of cycle, maybe prolonged, but still a normal cycle. So for altcoin season to exist, we do first have to have that real hype and kind of blow off top in Bitcoin. And I don't think we're there yet for Bitcoin, because just the nature of Bitcoin has changed with all of the the kind of treasury strategies and different institutions coming in and adopting crypto in this particular cycle. So I think we need, well, this is my personal opinion, so I'm really just, no one can really say exactly how it's going to go, but my playbook in my head is that Bitcoin needs to reach some new highs and sustain those new highs and get into a new trading range. So now we've got into that kind of trading range above the 100K, between the 100 and the 120. And we still don't even have a high sort of search rate on Google about, crypto, Bitcoin, because unlike other cycles, Bitcoin was kind of the coin of the people. When Bitcoin was going up, a lot of people were going, yeah, we're sticking it to the man, right? This is the coin that no one believes in, the institutions don't believe in, and we're going to show them that this thing is really the coin of the people, in a sense, right? So for that, there was all of this kind of following and hype behind. Every time Bitcoin went up, the media, traditional media, was going, what is this crazy coin that keeps going up and making millionaires and billionaires and so on? So there was this really intriguing kind of hype that they didn't understand, and it made it a very big subject on just in generally in media and stuff like that. That attracted a lot of people to the space, and then a lot of people saw, wow, there's more than Bitcoin, there's also Ethereum, Solana, all these other coins, and they started taking bets on them, and and those things started to pop. So there was a general interest that started coming around altcoins and everything around Bitcoin, this new technology, this new hype. Now there's kind of a stealth adoption around Bitcoin. The institutions are getting into it. The dialogue around Bitcoin is very different. People are talking about ETFs. Your average person doesn't know what an ETF is. The average person doesn't know what the debasement trade is, why different corporations would want to have a treasury strategy of Bitcoin to protect their cash flow and their spare capital. So now Bitcoin is starting to be talked about in a traditional finance tone or manner. There's all this dialogue where I think it's starting to disconnect from the average person who used to see it as the people's coin, and it's now going into this kind of traditional finance type asset. And I think that doesn't excite your average user. If you talk to anyone in the street, when I go to all these different conferences like Token 2049 in Singapore and the week before in Korea, and I always ask people when I take a taxi or something local, I'm here for a crypto conference, do you know Bitcoin? Most people don't really even have the basic understanding of what Bitcoin is, let alone what other coins are. So I think on that basis, we're still very early in the adoption of crypto. And that's why I think we're still at the stage now where Bitcoin needs to do a new high, sustain a new high for some time, let some of that hype trickle down into other things like Ethereum, Solana, and the large caps. And then from there, if we sustain that over a period of time, and that means 3, 4, 5 months of hype, we're going to start to bring a lot of attention into general public, and people are going to start hearing about their friends making a lot of money, and then you're going to see the research going up on Google search and all of that. And that's when I think we're going to really see the new or the latest alt season before it all kind of comes crashing down and starts again. So I think we're months away from it, but it's coming.
Yeah, you know what? That makes total sense. It's the first time I heard that kind of sentiment, and it makes total sense. I guess, in general, the people now are more educated financially into Bitcoin. They're not as crazy as 2020, 2021, where all meme coins, altcoins are just exploding because, as you mentioned, there's this hype. People are buying into anything crypto. Oh, buy this, buy that, buy that. And, my mindset at that time is that every time Bitcoin will raise up in value, that means that all altcoins will also go up. And that kind of changed my mind in the last year until now, because Bitcoin has been at an all-time high and it stayed there. It's still here actually for the last couple of months, but the altcoins are not as strong, as it's not as crazy back then.
Yeah.
And I was wondering, okay, I guess it's not right to consider that if Bitcoin is up, everything else, including meme coins and altcoins, are going up. I guess it depends on the hype, as you mentioned earlier. People buying it. It was the coin of the people, and I believe it still is, but it's not as explosive as it was before hitting all the deadline, all the news, and everything. So I think,
and I think there's also when people do start to get interested in crypto, and they see Bitcoin at 120 or at 100,000. And it was similar in the last cycle when Bitcoin was at 20,000 or 30,000. The first thing people tell me when I tell them, do you own any Bitcoin? I ask, and I kind of try to give them the reason why this is something anyone should allocate to. If you have any spare capital, it should slowly and gently go into Bitcoin to just as a safe haven asset. And most people tell me the same thing, and I hear it every time. It's too expensive. Bitcoin's at 30,000 or Bitcoins, and they're under the impression that they have to buy a Bitcoin. So that also is a deterring factor for people who don't know crypto. The first thing they see is Bitcoin at 100,000. They're like, I could never afford that, so they don't even get into it.
They
And I
don't
tell
know
them,
that
look,
they can buy a fraction of it or maybe a smaller
Satoshis
part.
are available. It's divisible by 0 point multiple zeros. I think it's to 7. If I'm not mistaken, it's 7 decimal places for a Satoshi. So I do tell people, it's don't look at the number. Just try to get in dollar cost average into it with whatever you can. If you want to buy $1 of Bitcoin, or you want to buy $10, but you can do that. And but just make sure that slowly over time, according to your budget, you can accumulate that. And so my advice to people, let's say, without giving financial advice or just the way I'm kind of playing it, is get into the safe haven asset, which today Bitcoin has proven to be. It's got the backing of institutions. It's got the backing of, in some way, the US government and multiple other governments, and sovereign wealth funds are getting into it. There's enough sort of backing from very large institutions, governments, and so on, to say that this has kind of proved the test of time. It's been around for nearly 16 years. It's gone through every kind of test you could imagine, from government bans to trying to stop the mining to all of those things. So I think Bitcoin's proved that it's here to stay. And with a capped supply, all you need is an increase in demand for it to go up. So I would tell people, start with putting some towards that, some long-term preservation of wealth towards that. And then definitely where the opportunity to make gains are still does remain in the smaller cap, in this alt season. And I would say just measure your portfolio. It's hard to say that because not everyone has a huge amount of money to just play around with. Like, I'm going to put 100,000 in this, and then I'm going to take only 5,000 and play with altcoins or something. But whatever the budget is, try to time it so that you've got a safety net. If you buy Bitcoin, you are in an asset that is over time going to go up. And then use a little bit of disposable income, if you have, to do either, like we said, some crazy bets, but that's very, very difficult to pull off. In really being able to just trade a low cap with leverage and pull it off every time takes a lot of experience, and most of those don't work that way. A real trader will take several losses that they'll cut their loss on, and then take one gain that will make up for the losses on several trades and outweigh them in terms of gains. So there is a technique to trade. But certainly I would say having a small portfolio of choice altcoins is a good idea at this point, because they haven't rallied, and they're not even close to rallying, but they will, because money is going to flow into the system over hopefully the next 3 to 6 months. And a few of those altcoins, that altcoin season, I still believe is coming. So a small bet to be safe, but that small bet could turn out to be a large part of the portfolio if alt season does come through.
I guess that's what we call moonbag in DGen terms.
Yeah,
Part of
the moon bag. Yeah. I haven't heard that in a while, but I'm sure as alt season starts coming along, that word will be used a lot more, I think, because I heard it a lot in the last cycle, because it was popping like crazy in the last one.
Yeah, I need to leave a moon bag. I'm gonna sell some of my profits, take out my initials, but I'm gonna leave a moon bag just in case it blows up.
Yeah.
As the kind of two people does. But what I see right now for people adopting into crypto is the barrier of having a proper platform to do it. Because most of the time I'll be posting my plays, sometimes in my personal socials, and people are gonna be asking me, "Oh, I'm gonna give you money. Can you buy this for me instead?" And I'm not the best fan of those kind of ideas, because I'd rather have people wanting to learn how to get into it. But then I open up that idea to them, and they're saying, "Oh, it's too much trouble. It's better I just hand out the money and you buy for me." And I think that serves as a barrier for a lot of people. They don't have any idea on how to start, where to start,
Yeah.
where they put their money that they can trust.
Yeah.
And
You're
in your
100%
case,
right.
yeah, and Changelly, I believe that's one of the things that you're actually helping people out. You have a simplified and, of course, cheap in a way that the best rates you will get in terms of exchanges. So how do you solve that in your platform?
Yeah. So, I mean, it's very true what you said. There is, okay, so the benefit of self-custody means that you're responsible for your own funds, which I think is absolutely fantastic. Everybody today should have, or let's say the trust we have in the banking system is misplaced. We've seen banks collapse. Not everyone gets their funds back, not so much in developed countries, but certainly in developing countries. So I think the fact that people don't really understand the concept of central banking, one, which means that governments are printing money, which is deflating the value of the currency, meaning people can purchase less with whatever they hold in their hand. That's one thing. That's just with regard to currency. Two, having money in banks and this blind faith that a bank, once your money is in a bank, it's safe. If I look back to what a bank was when I was growing up and what a bank is now, you could move money fairly freely with the bank. You were never asked if you wanted to withdraw it, why you were withdrawing your money or how much you could move around. Nowadays, you want to take out a certain amount, they're going to question you. Where are you going to use that money for? Where are you transferring it to? In my opinion, that's no one's business, certainly not a bank's opinion, to question me where and what I'm doing with my own money that I put in their custody. So
I'm going to say security reasons. Yes.
There are security reasons, of course, and we've got very much accustomed to, again, AML and all these kind of things of money laundering and all that. The world's getting bigger and they need to put more checks and balances in place. But to be honest, it's in my opinion, it's invasive and it's too much. I think we're slowly getting used to giving our freedoms away to governments and banks. And I don't think it should be to that degree, which is why I'm in crypto, because I think people need to learn how to and understand that it's safer to self-custody, and that as fintech is developing, if you're worried today that if you put money into crypto, you won't be able to take it out, that has been the case very much for the last 10 years as crypto has been very much marginalized. But today there are countless amount of fintech companies that are bridging that gap between the traditional capital that you hold in your bank and, let's say, stable coins like USDT, USDC that you can hold self-custody in your own crypto wallet. So yeah, if you look forward in 5 years, if you fear today you get into crypto, you can't get out of it, it's a valid thing to be thinking about. But that will disappear in the next few years as we totally merge between fintech and traditional finance. And holding money in your own wallet will be just as good as holding money in a bank. You'll be able to use a credit card. In fact, there are many companies that are already offering that. You'll be able to use a credit card to spend your crypto capital. You'll be able to hold your own assets, and you won't be at the whim of anyone telling you what and where you're sending the money to, and so on. So
yeah,
in relation to that, as you said, Changelly is one of those companies that is offering people through these fintech partners that we have. So a lot of these brilliant fintech companies I mentioned, we aggregate these companies, meaning we pull together the best of the fintech companies that offer people the opportunity to do something called on-ramping and off-ramping. On-ramping basically means you want to spend your fiat currency, your US dollars, your Japanese yen or euros, and you want to buy crypto. So those companies offer that on-ramp, means coming into and on-ramping into crypto. They offer that on-ramping facility. And what we do at Changelly is we've brought them together and we allow people to go onto our website and very easily pick and choose one of those different fintech providers to allow them to transfer from US dollars and then deposit that money into a wallet. So first thing they need obviously is a wallet, as you said. Explaining those first steps is to someone who's not in crypto is difficult to explain to them what a wallet is, but effectively it's your own bank account. And then we also allow them the facility. What we're known for is crypto swaps. So if someone does get into crypto, let's say they swap 100 US dollars into USDT and they hold it in their wallet, we back a lot of the wallets, and working with Coinomi as one of our partners, to offer exactly that swap facility. So if someone wants to take their USDT and get venturous and buy some Bitcoin, they can swap that through Changelly's swap engine, and they can do that on their preferred wallet like Coinomi or other well-respected and big wallets in the industry. So yeah, we're very happy to work with partners like yourself and be able to offer people the chance to get into crypto and then be able to swap between crypto assets.
And also having this kind of spaces to be sharing ideas and thoughts about the current state of trading, and especially in the crypto, definitely helps out the community to be more educated. It goes along what you mentioned earlier, to be a smarter trader
Yeah, yeah.
in terms of this. And I would also like to share my experience with banking. That's also why I completely lost trust in the banking system. Like, I
Mm.
was using a multi-currency wallet. It's one of, if not the biggest one. I'm not gonna name it. And out of nowhere, I got an email saying that my account is suspended, and I have a huge chunk of my funds in that wallet. And at that day, I sent an appeal saying to them that, hey, I didn't do anything suspicious in my account, and I just got a message saying, okay, your request for appeal is denied, and they just shut down my account just like that in one day. I didn't have any
Mm.
time to prepare, and they didn't give me an explanation and why it was cut off. Like, no explanation, because it's something along that, they just a general term for doing something wrong with their terms and regulations. I got
Mm.
my money back eventually. It took me a few weeks for them to send my money back, but there's some percentage that were cut off from that money, and that was a terrible experience for me. I trusted
Mm.
most of my funds in that
And
bank,
that,
and it's an international bank, and yeah, that was
yeah,
crazy.
yeah, yeah, yeah. I mean, I've heard that story many times. That the banks, um, ultimately when it comes to anything centralized, and of course even in the crypto space we have decentralized and centralized. A centralized exchange, I would say, is not too different from a bank in the sense that it is run by a company and owners and
Yes,
so on and so forth. So there are good banks out there. There are good crypto exchanges out there. And then also when it's centralized, there are bad ones out there. Whereas I think a centralized exchange in crypto, I still trust a centralized exchange in crypto more than I trust a bank. The reason
of
being,
course.
the traditional finance, sort of network has been around for so long, and it's so regulated, and it's so controlled that today I minimize my exposure to any bank account. So I still do prefer nowadays to hold money in stable coins in a crypto wallet than I do to hold US dollars in a bank, just because of the reasons you mentioned. A bank can turn around tomorrow and tell you, you don't fit the profile that we're interested in. You didn't move money to the right place at the right time, and you never know which country is going to be on the list of countries they don't want to have a transfer going to. So yeah, I minimize what I hold in banks nowadays.
Exactly. And, trust issues grew a lot from that. And, mine is not an isolated case, because I check on some forums.
Hmm.
They have the same kind of problem and different kinds of banking apps. And, the fact that someone can just immediately seize control of your assets without any explanation is a scary thought. And I
Yep.
hope no one needs to experience that before learning how unstable banking is in
Yeah.
general.
I
And
mean, I think
yeah,
if you bank and you live according to very normal, and when I say normal, if let's say you fit society's mold in a very good way, meaning you have a job that pays you a monthly salary that's deposited to the same account that you've had for years. You don't have any unusual purchases or needs to transfer. You're not transferring money to a foreign country for on a regular basis. So if you're just basically, I live in a certain city, I make my money here, I spend it on my groceries, I take a few holidays per year. Your bank views you as a very good client. You just have an ordinary and calculated spend, and it's within an environment and within a geographical area that is very, how to say, I wouldn't say controlled, but easy to understand. As soon as you have a little bit of an international, or maybe some kind of needs to spend money or access cash or something like that, you could be closed out of the banking system just because they see unusual activity. And that
yes,
happened to a friend of mine. He's also, so he's UK born like me, grew up in the UK, went to all the UK schools and universities and everything. But his father is Lebanese, so he does travel back and forth to Lebanon every once in a while. He is a former banker himself, dealing with high net worth individuals out of Abu Dhabi and stuff. So he's got a good background in banking, in economics, in all that stuff. And he was coming back and forth. So he stopped working because he was doing quite well. He stopped working. He got into crypto and He got into other businesses with sort of self-run business, so out of regular employment. And he would take out cash from his bank in the UK because in Lebanon, as I said, the banking system collapsed. So he would bring cash to his father. And I think because of the fact that he didn't have stable income from a company, he's withdrawing cash every once in a while. They did the same thing that they did to you overnight. They just told him, we don't understand your activity or whatever it is. We feel it's suspicious. And they just closed down his account and send him a check. And he said, what
They
do you want
didn't
me
give
to do
him
with
the
it?
chance to explain the situation at all. Just
Nothing.
like
Yeah, nothing at all. Yeah, no.
that's the
So
worst thing.
crypto is the way to go.
Exactly. Now I'm checking out my wallet, my old wallet from before, and it's still active. I still have a few dollars there. It's a lot more now.
Yeah.
And that's the crazy thing about crypto. It will stay there for a long time. People are saying crypto is unstable, but it's more dependable right now compared to the traditional banking means that we have.
And you also have a possibility to earn interest in crypto, far exceeding the kind of earn that you can in keeping your money in the bank. A bank will not offer you more than the whatever they call it, LIBOR rate, or the rate set by the government, plus or minus a very small percent. So if you're earning 3-4% with a bank, it's pretty good. If you put your money into treasury bills and get 4%, it's pretty good. But ultimately, that's not keeping up with the rate of inflation. So you're losing money even if you leave your money in a bank and you earn 3% or 4% per year. Whereas in crypto, you have a lot more options to earn higher yields. There's a lot of crypto projects, and in this case, as we're talking about, altcoin projects, which a lot of them are running like businesses. You could nearly consider those altcoins as stocks, if you'd like, and they are offering dividends in the form of yield and earn. And as long as you pick something that you've done your research on, you can get a fairly good amount of return. Certainly more than you would
percentage wise, there's going to be a lot bigger compared to the banking things.
Yeah.
And I guess in some governments they do cut a percentage as tax on the earnings that you've already made. But in crypto, it's all yours. Maybe there's some platform fees, but in general, it's really minimal. And I think that's a great thing about crypto dividends.
Yeah, definitely. And I think depending on the jurisdiction and where you live, different countries do regulate crypto differently. And I think there is some tax to pay on gains in crypto, but that really does come down to which country you live in and how it's regulated. But ideally, if there was some, I think I can't remember which law passed in the States, but I think they want to treat Bitcoin as a currency, which means that if Bitcoin goes up, those would not be considered as gains; they would just be considered as movement of a currency. And that would be amazing, for the adoption of Bitcoin.
Gains can't be taxed, I've heard, so they can't really tax you up higher because of the gains in your holdings.
Yeah. Not paying tax on Bitcoin would be absolutely amazing for the asset.
And I've been wanting to ask this since you mentioned that you have your experience in stocks outside crypto. Do you think that the market that we have in general in the world affects the growth of Bitcoin? Does it have an opposite effect? Let's say the market goes down outside crypto might go up, or it will go down along with it. How does it play out based on your experience with this?
I mean, I've always said it's correlated. Everything on any asset is going to have a correlation. So I know when I was getting into crypto in the beginning, coming from traditional trading, and I was telling the people who were introducing me to crypto that this is kind of going to be correlated to what the stock market is going to do. They laughed at me and they told me no way and all the rest of it. But the bottom line is the planet works on how much liquidity overall is pumped into the system, and that's something that's called the M2 money supply. And you can see that affects everything from the first thing it will have an effect on is real estate. So when we talk about cycles, we're talking about real estate cycles, and when we're talking about money supply cycles, M2 money supply. So what that means is governments and central banks will have these periods where they issue more currency, and now we're about to enter into that. So, for example, during COVID, there was a large amount of capital that was printed because people were out of work. So the Federal Reserve issued more debt and printed a lot of money to give to people to survive this downturn in COVID. That's what we call kind of increasing M2 money supply. So suddenly there's just a lot more dollars, a lot more euros, a lot more currencies that flood into the system. And that affects all type of assets. So that means people will basically have more money in their hands, and what they'll do is put it towards property. At the same time, when they print money, they do something in tandem with that, which is they lower interest rates, which means people can borrow more. So overall, it's known as quantitative easing. It means make it easier for people to have money in their hand and spend money. So one way of doing that is lowering interest rates. It means people can go out and borrow for virtually nothing. So if you can borrow money for nothing, you're going to go and get a mortgage and buy a house. You're going to buy a new car. You're going to start spending. So that's the way they try to stimulate the economy, is lower interest rates, allow people to get their hands on money cheaply, and then flood the money with more capital, print money. You know, when they talk about the money printer, that's quantitative easing. And that is what we call M2 money supply. It's all the money that comes into the system. When M2 money supply grows,
become more expensive if they flood too much money. You know, the typical.
Yeah, so that's the thing. If they, and you're spot on, but in the reverse, in a reverse way of saying it, things don't become more expensive. The value of the currency becomes more diluted. So in result, things appear to be more expensive. But if you think of an asset, the asset itself isn't more expensive. It's still the same asset. It just costs more money to buy that asset. So really, it isn't that things are getting more expensive. It's that the currency you're buying it with is becoming worthless. You know, if you pour yourself a whiskey and then someone tells you put a little bit of water in it, it's still going to be fairly strong. But if he tells you keep going with the water, keep going, at the end he's going to dilute it. You can barely taste the whiskey. That's what's happening with currencies around the world. They're literally just being diluted because they're just being pumped more and more of these notes and, you know, digital dollars and all the rest of it into the system. And when you've got 3-4 times more capital for the same amount of goods, well, those goods are going to appear to be way more expensive. But as a matter of fact, it's just the currency itself is worthless. And I mean, it's very easy if you take a long-term perspective. So if you look at how much, let's say, a house cost or a car cost or something like that 30 years ago, and you take, let's say, a stable city like New York or London, where the population hasn't increased by twofold, threefold. It's pretty much, you know, London might have been at, 5-6 million people 30 years ago, and now it might be at 7. So 20% increase in population, right? But yet the price from 30 years ago has gone up by threefold. So you can't say the demand went up by threefold because there isn't 3 times more people living in that city. The only way to explain that is that the currency itself has lost 3 times or 2 and something times its value. So when you do look back, you see I could buy a house for $100,000 30 years ago, and that same house is today, $700,000. It's the same house with the same amount of people around it and a similar level of demand. So yeah, you can see currency devaluation or inflation when you zoom out and you zoom back. And you just think to what your parents paid for a house and what you need to pay for a house today. And the numbers are just so ridiculously outrageous. And that's what Bitcoin is here to protect against. And that's what, some of these other cryptocurrencies are going to help with, is kind of reestablishing maybe a little bit of, wealth protection. A bit like gold, gold has been around for a long time. And
although gold is doing great the past few months too, but
yeah.
It's still on Bitcoin. My money is still on Bitcoin in general in the long term.
I think in what I'm trying to say is everything moves up in synchronicity. So money supply goes up, stocks go up, crypto goes up. And when I say crypto goes up, let's say some of that money flows into Bitcoin and then it flows into Ethereum. When there's enough liquidity, and so now we're at the beginning of a new kind of liquidity cycle. The Federal Reserve has just lowered interest rates by, I think, 25 basis points, and they're going to be doing a lot more lowering of interest rates over the next quarter and probably into next year. That's the beginning of the real quantitative easing, that flow of money into society. So we're kind of at the beginning of what we saw. We were expecting to see this at the beginning of this year. We were expecting interest rates to be cut at the beginning of this. They're not. They're now being cut at the end of this. So we've moved this whole cycle of liquidity further, which is why I'm saying I think we're going to have a prolonged cycle in crypto. It's a prolonged cycle in the liquidity supply. And so if money floods into Bitcoin and everyone starts to feel like, wow, times are good, I've got all this extra capital, I can borrow cheaply, I can put money into Bitcoin, Bitcoin has gone up, I'm doing really well, that's when the euphoric period comes in, and people start to say, wow, I'm just making money here. Everything's going well. The economy is going up. There's more money in the system. That's when you'll see that trickle down into risk. Wow, if I'm making so much money in Bitcoin, look at these other things I could make way more money in. If I put $10 in Bitcoin, it'll go up, maybe 30% over the next few months or year. But if I put, those $10 into an altcoin, that thing's going up 100% a day. So that risk appetite will grow when people feel confident, when they feel, wow, I've got money, I'm making money. There's a lot of money circulating in the economy. People are buying new cars, stuff like that. And I think that's still to come. That'll come when the interest rates drop further and more of this liquidity comes into the market. So, and that usually is the end of the cycle. People get too excited, they buy everything, and then things crash.
Yeah, no one can control that. But
Yeah.
I guess not financial advice for anyone at this point at this time.
Sure.
What would you advise to people right now who's going into not just Bitcoin but just altcoin? What would be your advice for them who wanted to go in this I guess in this industry or in this space?
I would say patience is definitely a good thing. Look, if you're looking at Bitcoin, and I know, well, I'm 50 years old, so I'm kind of out of luck in terms of how much time I've got left to generate wealth over a long period of time. But if you're a young person listening and you're in your 20s or maybe late 20s, 30s, or even younger, you have such an amazing opportunity now to accumulate something like Bitcoin, which if you take a long-term view, the chance of Bitcoin going down over time is extremely low. So again, I'm not giving financial advice. I'm just giving an opinion on an asset that I think, in fact, I think the whole crypto space, it's only a 3-something trillion market cap. I saw the dot-com period where around about 1997, the entire value of the World Wide Web, as we know it today, Web 2, was only the same. It was about a 2-point-something trillion market cap. So that means everything today that the iPhones, the web pages, what we're talking on today, all of these social media, all of that stuff, which is now worth, hundreds and hundreds of trillions, if not thousands of trillions in value, that was worth less than what the crypto space is worth. If you take all the companies that were working on the internet, it was tiny, which is today crypto overall is tiny in relation to global markets. And if in those days you had taken a few choice picks and you had backed a few of the right kind of companies, you would have you'd made a fortune. Like if you bought into Apple, Amazon, and all of those guys. Now, in those days, Amazon didn't look like a good pick. And there was a whole bunch of companies before Facebook. Facebook was not the first one to make a fortune. There was a lot of companies before Facebook that made nothing. Hundreds of social media platforms that came out on the internet that made nothing. Facebook was one of the lucky ones, and the companies we know today are the lucky ones. I think somewhere in the crypto market today, there are those companies that are going to be the companies of the future, that are going to be the Teslas, the all the companies we know today that we work on that emerged from the internet boom. There will be the similar thing coming out of crypto. There are going to be a lot of companies. So I think if you're a young person today, Bitcoin is a safe asset. It will have great returns over time. So if you can just compound into Bitcoin and you can do that over a 20, 30, 40-year horizon, you will be coming out at, I know when you're 20, you never think I'm going to be 50 or I'm going to be 60. But you are going to be 50 or 60. And when you are 50 or 60, if you don't make the right moves now when you're 20, you'll regret it. And a simple thing you could do today is we've got this unbelievable emerging asset called Bitcoin that looks like it has a chance to be one of those safe haven assets that will increase in value over the next 10, 20, 30, 40, and 100 years to come. So my advice, and I don't want it to be financial advice, it's personal advice. If I was talking to myself in my 20s, I would do whatever I could to accumulate Bitcoin as a safe asset. And then I would take some bets and I would do some research on companies in this space, in the crypto space, that spread out a little bit of capital over 5 or 10 or 15 or whatever you can afford to spread out companies. Not all of them will win. Many of them will lose. But in this ecosystem, and I'm looking at my screen as I'm saying that, I'm looking at different altcoins. there are some that are going to come out and they will 10x, 20x, 100x over the next 5-10 years. So try to make some choice picks of altcoins. I would say closer to the larger caps. Think about the Ethereums, the Solanas, the maybe BNB, XRP, whatever it is that you want to study, but study it and have conviction that you want to put a little bit towards that, a safe amount. Don't bet the bank on it. And then move down the scale a little bit. And if you've got some spare cash, then, meme coins and things, take those as a gamble, take those as a day in the casino or something, and maybe put a little bit of, but that's short-term gain stuff. And that's really up to the appetite of the whoever's, listening. I would say don't bet on things like meme with a long-term conviction that this meme coin is going to make me rich and is going to make me retire. It's one in a million meme coins that will actually withstand the test of time. So I wouldn't bet on those. I would maybe mess around with them a little bit here and there, but I wouldn't make a long-term bet on those. So yeah, just work your budget. Safe haven asset, Bitcoin, a little bit into, take a good bet and study the different altcoins that are available out there. A lot of them are really successful, are going to be really successful companies. Try to get a bag of those and hold them even through, maybe not hold them through all the cycles, but try to have conviction on what you get into, and then play around with the small stuff with small budget. That would be my advice to myself if I was going 20, 30 years, maybe 30 years back, because I always regret not having just bought NASDAQ. Where 30 years ago, if I just bought NASDAQ and held it, I wouldn't be on this call. I'd be retired on a beach somewhere.
Yeah. We have a lot of those coins. Those things that if only I hold this, if I didn't sell at this time, it could have been really big.
And it's not so attractive, just to buy one thing and hold it. But if you have a long-term perspective, you'll come out winner. If you try to make short-term gains, you're probably going to lose a lot.
Exactly. And I want to go back to what you said earlier about not buying, people not buying into Bitcoin because they look at the value. It's $100,000 now. It's too big for me to buy. And then I look back to like 3-4 years ago. I've been talking to people. Oh, Bitcoin is at like 16K, but maybe it can go lower and lower and lower. And look at us now. 4 years after, it's 100K right now. So don't look at the value that it has right now, but what I try to do is try to look at the movements.
Yeah.
If in the long term it's still growing larger, then that's what you should see in investing. No financial advice, but that's how I look into things. Not about the value. And as you mentioned earlier, you don't need to have $100,000 to buy a single Bitcoin. You can buy 0.0007 or something like that.
Sure.
So that's the thing that you need a lot of people.
There's also an opportunity in the volatility. So when an asset just goes straight up in one direction, which never really happens, but there are periods when assets go up in one direction, but the volatility is also opportunity. So certainly if you're looking at doing leverage and trading, then I would say that's a different subject. And I don't really want to talk on leverage and doing those kind of 10x trades and things like that, because that is really dangerous stuff. But if you're looking at getting into memes or altcoins or Bitcoin, if you take that long-term view and you dollar cost average, you're going to catch it at its highs and you're going to catch it at its lows. And that is a very good long-term strategy. And I'm sure people have heard about it, but dollar cost average into something you believe in is the best way to do it. Just set up a $20 or a $50 automated investment into Bitcoin every Friday at 6 p.m. or whatever it is, regardless of where the price is. And if you did that, you would have caught Bitcoin on its last tumble. And if you were doing that from last year, you would have caught Bitcoin, all the way down to, if you did it from the last cycle, you would have got Bitcoin in your wallet for 15,000. So if you just consistently put every week a little sum that you can afford to into Bitcoin over time, it will turn out to be a good, again, not financial advice, but that's, if you're investing, that's a very good strategy to do, is dollar cost average into an asset, whichever asset you feel you've got conviction for.
You know what people, my elders told me, or my businessman elders told me, no one will get really rich by just saving up so much money in the bank. It's all about investing in the right kind of assets, because in the bank, as you've mentioned earlier, you'll save a lot of money in the bank, but at the end of the day, inflation will just even it out or even make you lose some value. in general in the long term.
Yeah,
But
saving
in the other,
was a good strategy. You know, if you're looking at before the dollar was depegged from gold. So if you're looking back in the 40s, 30s, 40s, 50s, 60s, saving money in those days was an amazing thing to do. If you could, because in those days currencies were pegged to gold. There was a gold standard, which meant that, and this is even hard for people to even understand nowadays, but currencies were stable because currencies weren't in relation to each other. They were all in relation to gold. So there was no foreign exchange market. There was no FX trading. And that to me is just, it's hard to believe because as I said, I grew up as an FX trader and a futures trader. But when it was pegged to gold, there was no need for FX. Because if you had, let's say, 10 French francs made up an ounce of gold, and then you had $1 made up an ounce of gold, I'm just making up numbers here, right? But 10 francs would always be an ounce of gold, and $1 would always be an ounce of gold. So the price of dollar to the French franc never moved. It was just in relation to a stable asset, which was gold. And so in those days, currencies weren't losing value at the rate that they are now. They were losing at a very, very slow rate of inflation, a very moderate rate of inflation. And if you looked at in those days also, they weren't printing currencies because you didn't need to print because your currency was stable against the dominant asset in those days, which was gold. So your GDP and the rate of increasing money supply were in line. And so there was barely any inflation. But nowadays, ever since they depegged from the gold standard, and especially with the increasing amount of debt in the governments, they have to print more to cover their debt, and then they have to print more in times of crisis like COVID and stuff like that. So today holding cash as a long-term strategy is absurd, and I keep trying to
yes,
tell people that it's unless you're super wealthy, in which case you have more cash than you'll ever need to spend, and you've got enough cash that even if it debases by half its value, you still got enough to you won't notice the difference. Then of course it doesn't, for those people it's not that important. If you've got a super high paid job and it's always going to be paid more than the rate of currency debasement, people won't notice it. But for your average person with an average income, and saving in cash is not worth it. It's not the right thing to do, not anymore.
yeah. I guess a simple explanation for those people is that imagine having let's say $5 in your bank account 10 years ago.
Mm-hmm.
The price of Big Mac back then might be around $2, $3.
Yeah.
And then compared to the price of Big Mac after 10 years, let's say right now, Big Mac might have doubled in price, but your $5, let's say you might have gotten some interest from the bank, it might turn to $6 right now, but the Big Mac might be like double the price. I think that's a simple
Yeah, I
explanation of
mean,
how the inflation goes.
definitely.
Mhm.
If you, I mean, take a real price. How much is a Big Mac meal where you are now?
Right now, it's around €7, €8. Sorry, I'm not the big of
Okay,
McDonald's, but I guess in Duna, in Berlin, a Duna is like €8 back
€8.
then,
Yeah,
and right now, yeah.
yeah. Because
But like
I
5 years
remember
ago, it's like €3, €4. Yeah,
that's the thing. Yeah,
just the last 5 years though.
yeah, exactly. Yeah, it went from a few dollars, so it kind of doubled. I can give you an example of the UK. When I was growing up, and it sounds so crazy because I'd hear my parents say stuff like this, so now I'm saying it. But I used to be able to take the metro, the underground, for 25 cents to go to school from my house. That same journey now is, I think, about £4, which means from 25 cents, to get to a pound, that's already four times increase. To get to £4, that's 16 times higher. So we're talking something that I used to do, let's say 35, 40 years ago,
Crazy. Yeah.
16 times higher. That's, a 16,000% increase. That's absolutely, it's wild. The fish and chips in the UK used to be, £1. Now fish and chips, you'll be lucky if you can get it for less than, 10. Again, a tenfold increase
Yeah.
in 25, 30 years. So things are accelerating. Currency devaluation is accelerating, and that's what's going to bring a lot of money into the crypto space. I don't know if recently you've kind of followed the debasement trade. It's something that's being talked about more and more now on Wall Street. So basically, a lot of companies, a lot of large corporations are understanding that the devaluation of currency is accelerating, which they should have understood a long time ago, but it was really accentuated after COVID because that was an unprecedented amount of capital printing and devaluation. So there's now something, big talk in traditional finance is the debasement trade. It means that large companies, corporations, even governments are not wanting to put their money in treasury bills, which was typically the way of saving your capital or preservation of wealth, because a treasury bill was safe and it would give you a few percent. Now they're starting to understand and open their eyes. We're talking about Wall Street and traditional finance are starting to open their eyes and say, well, if I only get 3-4% in those safe haven assets like treasury bills, I'm still going to be losing money. So they're doing something called the debasement trade, which means more and more people are moving. And by people, I mean corporations, entities, hedge funds are moving more capital into gold, and Bitcoin is starting to be seen as this safe haven asset, digital gold in a sense. And so I do believe a lot of capital is going to flow into the crypto space over the next few years, and certainly if you take a 5-year horizon, I think we're going to see a market cap of maybe 3 or 4 go into a market cap of 10, 15, 20 over the next 5, 10, 15, 20 years. So a large amount of capital from traditional finance and traditional landscape is going to be moving into crypto. That's what's being talked about right now in the traditional finance space through the debasement trade. And the other compounding factor is the treasury strategies. The famous Michael Saylor with his company Strategy. He was the first to basically buy Bitcoin and put it on his balance sheet. Then came a second company. There was a famous one in Japan. And then came a third, and then a fifth, and a 10th, and now we're up to over 200 plus companies that are basically putting Bitcoin on into their balance sheet. It's a growing trend, and companies have a lot more money than retail and individuals like us. So when you start talking about possibly thousands of companies putting Bitcoin into their balance sheet to protect their gains, we're talking about astronomical, sums of money that will be flowing into Bitcoin, and eventually, as I said, that will trickle into successful altcoin projects. And when it looks really good, it's also going to trickle into meme coins and all of that stuff. They're going to have their time in the sun, and I think that's going to happen. I think that's still going to happen this cycle, and then there might be a bit of a cleanup in the crypto space. I think we'll start to narrow down the successful projects in the next cycle, and it will become more regulated. The winners will start to come on top, and we'll have less of the, to use a crypto term, less of the shit coins will be in the space, but you got to go through those in order to pick the winners, right? So I'm saying
Exactly.
this is a natural.
I mean, the more chances, the more entries, the more chances of winning. So you need to, but of course, you need to be smart with your bets and which kind of meme coins or altcoins you're going to go in.
Yeah.
But of course, that's where doing your own research
Yep.
definitely helps out.
And it's
in
worth playing those. It's worth taking a, like I said, small amount and doing some, swap into a few of these coins. Wait for the narrative. Wait for a hype. Like the AI hype, or there's a meme coin. There's a time to buy meme. I just never did it because I don't like to go that far down the cycle, because I kind of have a traditional mentality. But yeah, there's certainly a lot of people I knew that are the smart investors that came from traditional background, and they did look into when the meme coin narrative was there, and some made money on it. Obviously, some lost money on it. So yeah, everything is worth looking at and studying. The only thing that this cycle is a bit more difficult than the last cycle. In the last cycle, to create a token or to create a coin or a token or a meme or whatever it wasn't that easy. The space wasn't yet quite so evolved. There wasn't Solana wasn't yet quite as sophisticated as it is now. Today, anyone can kind of go online, have a basic understanding in the crypto space, and just release a token or release a meme or something. So in the last cycle, when we had maybe tens of thousands of different altcoins and tokens, this cycle we have millions. So it was easier to pump, let's say, 10,000 coins in the last cycle with, if today retail comes in and really gets interested in crypto and we get like 1 million new users, When 1 million new users come in and each put $10 into an ecosystem that only has 10,000 coins, you're spreading that money on 10,000 coins. They all have a chance to go up. Whereas today we have millions and millions of tokens. So even if we have the same or an increased number of users coming into the space and all pouring $10 into the ecosystem, it's going to be spread over a much larger number of tokens. So in the last run, you could pretty much buy anything and you had a good chance that it would go up. In this run, I would say there are a few things that are going to go up, but you just need to select them a little bit more cautiously than in the last cycle. That would be my recommendation.
Okay, and that's quite an advice. And unfortunately, John, it's we've come to the last part. I lost track of time. It was really an insightful conversation. I really learned a lot, and I'm sure
Thanks.
our listeners learned a lot as well. And that is quite a future that we're seeing for Bitcoins and, of course, altcoins as well.
Yep.
Companies adopting it. And, a few years ago, I guess the country was actually adapting it. I believe they still have it, but I don't know how it goes. But that's just a start. That's just the tip of the iceberg that people are knowing about crypto. So in the future, we'll see how it goes. But the most important thing is you're well informed, you're well aware of the risks of the trades, and that's where John and I guess Changelly can help you out, especially with integrating your funds and trading with crypto, not just the major coins, but also some altcoins as well.
Absolutely.
So John,
Thank you so much.
before we end, of course, and of course, before we end this, maybe you would like to have any, final words like announcements about Changelly or updates. Feel free to do so now.
Well, I would say thanks, for mentioning Changelly. We definitely are a good gateway for people who are wanting to enter the space. We try to keep things as simple as possible. So it means if you are swapping coins on, let's say, a DeFi platform or various other places, you've got a lot of choices where you can enter the space and swap. We try to keep it simple. We do end-to-end swaps. We take out a little bit of the complication of things like bridging and a lot of stuff that people who are new to the industry will struggle to figure out. So yeah, Changelly is definitely a good entry spot for people thinking to get into crypto. And as you said, stay safe, study the coins you wanna get, have some conviction, and know that if you're in it for the long run, the crypto ecosystem as a whole is going to grow tremendously, just as no one believed in the internet in the 90s, and a lot of people don't believe in crypto today. But this is emerging technology. It does a lot of things better than traditional finance in terms of how quickly you can settle, transfer, the visibility of trade. So the technology is better, and it can only be adopted and increased. So the overall market cap of the crypto space is going to grow, and I would incentivize anyone to study it, take a bet, and get into it as safely as you can, and use a good wallet partner like Coinomi, who have a lot of options for you to hold your capital safely, earn, and all the rest of it. So yeah, if you're looking for a starting point, Coinomi and Changelly is a good combo for someone entering the crypto ecosystem.
Absolutely. And that is today's episode for Coinomi Connect. Hopefully, it has been an insightful episode for everyone. To learn more about crypto or trading in general, it's quite a discussion that we have, but it's definitely worth it for everyone that is listening, especially for those wondering about the future of Bitcoin and, of course, altcoin. So thank you once again, John from Changelly, and everyone else that's listening to Coinomi Connect. And we'll hope to see you again on the next spaces here at Coinomi. See you
Thank
guys.
Duane. Take care. Thank you, Duane. Have a great day.